Hello, ladies and gentlemen, and welcome to this afternoon webinar. My name is Theo, for those who don't know me and see me for first time, and I'm simply here to introduce you to Jens, and he will take it from there. I'm sure you're going to have a great session today. Just before we, until Jens join us, I would like to make sure that you all know about our Instagram channel. It's one of the, in my opinion, one of the best channels to keep an eye on. There it's Mr. Jens. Hello. So if you kindly just follow us on the Instagram, you're gonna see so many stories, reels on a daily basis, content, and it's a great tool to get information out of. So here is the link. Jens, hello, how are you?
Hello, Theo. I'm fine. How are you?
I'm very well, thank you. It's always a pleasure to have you in the webinars. And I'm sure the audience, the traders, they're going to have a great informative session. They have so many things to learn from you, from your experience, from your knowledge, your analysis, and I'm sure they go.
So Theo just lost the connection. That's not so good. Oh, there you are once again. So, but thanks for all the kind words. I didn't hear everything, but it started really nice. So.
All right, so you can try to share your screen just to make sure everything works fine. Yeah, my internet connection is a bit unstable now, but I'm sure it's
at least you have electricity. So I'm in Germany. What shall I say?
Awesome.
So you can see my screen, trade the news.
Yes, I can. What about the traders?
Beautiful. So let me just say hello traders. And I want to jump right into the action. Today is it's a great day. It's a special day. In fact, so we're in midst of the earnings season. So yesterday you probably have heard that we had Tesla and earnings, and it was crazy volume, which was traded already in the pre-market. I think 50 million shares, if I'm not mistaken. On average, still we have 130 million, but then the day closed with something like 233 million shares being traded. And it's also, again, very hot today, the stock. But in fact, it's only my second play for the day. And I'm not really sure if I really want to trade Tesla, in fact, because my bias starts to switch a little. So I was long, and especially after the breakout above 125, I was long. But now the mode seems a little extended. The problem is, a problem, put this in quotation marks, it's probably the problem is that we were already very extended on the downside too. I think that many got very bearish on the stock. And now, especially after the earnings, but also after the earnings call with Elon Musk yesterday, I think they realize, well, overall, the company does really well. And so, well, probably we got a little too bearish. I'm not saying that I'm already longer term now long. I'd like to see 200 USD being recaptured. But given the overall bearish bias and the massive volume which we saw turnover over the course of the month of December and also at the beginning of this year, I'm not really sure how long this short covering could last, in fact. So I'm still kind of like starting to wonder, probably a bounce play, a pull-in trade probably we could look at. But that's only my second thought for the day. I'm not really sure whether we get something to see in this regard. Right now, I think we are ahead something like 1.5% or something. So, but what we want to look at is Intel. Intel, and it's usually not such a volatile stock, but after the earnings yesterday, disappointed massively. Also the guidance, we have a very, very, very hot stock for today. And I really look forward, in fact, trading it, because also the pre-market is very interesting, and the levels which we got to see. And what we will do, and this is what today's webinar will be about, I will guide you through my whole process, how to spot these trades, so respectively how to spot these stocks, then what I need to see so that I consider the stock to be hot for the day. And in addition to that, also the checklist I go through, we are going after trade, in fact. So this is no test or something like that, but this will most likely be real trading. Let's see whether we get to see a trade. But, and this is exactly now the point which I want to make, if I make a trade in this context, and you say, well, this is Jens and I trust him, or I just want to copy him, please make sure that you understand all risks involved when trading the markets in general, but especially when trading CFDs, leverage products. So there's high risk involved that you could lose money. This regard, please make sure that you understand these risks. Please understand that if you take a trade, I'm on the wrong side more often than not. At the end, it's the payoff which pays the bills, let's say, or respectively, which lets my trading become profitable. Please understand that you bear all responsibility and are taking all risks involved when taking the trades. This is for purely educational purposes. What I present to you, I guide you through my checklist, and then we take it from there. And I will show you also how to enter a trade, or respectively what levels to watch if we get to see a trade. Let's see. Sometimes it takes a little. So I think the first, we have still 50 minutes into the day. I don't really like to play straight away the open, or probably I need to say a little differently. It's not that I don't like to trade it or that I can trade it, but I prefer to be completely in my zone. So right now I'm in a webinar, so talking to you, chatting with you, asking, respectively answering questions. So this is something which distracts me, and that's why I know that I'm not that focused, or not as focused as I need to be to really play the opening. And that being said, or the opening drive, let's call it that way. That's why probably we need to see some time go by, and then after we get a clearer picture, we take it from there. But probably we also get to see the trade. Again, if you see the trade, if you make the trade, please be aware that there are risks involved. And that being said, let's jump into the action. So about Admirals, I don't need to introduce the broker anymore. I think Theo already did an awesome job here in this context. What we want to do is we want to head over here into the platform. Let me just first of all guide you probably through my layout, that you get an idea of what you see here. So I have, by the way, let me just take MSFT out here. I played MSFT. That was a trade. Probably that's also something which we could make a topic somewhere in the future. I'm not really sure, but probably somewhere around something like Thanksgiving or so. I mean, that's sometime ahead, but that I guide you through a trade which I recently made. And in case of MSFT, that was after the earnings on Tuesday, on Wednesday. But interestingly, I game planned for the short side, but played the long side then, and the reversal we got to see there. That's why the stock was still open there. But I have usually here only the shares I plan to trade for the day. So it's, in this case, it's TSLA, this is Tesla, and then I have INTC, which is Intel. I don't want to, or I also have the spider and the Qs, so the overall market. But I try to keep it very straightforward and very clean in this case. So I don't like to be overwhelmed by other quotes coming into or something like that, but really focusing on the stocks I plan to trade. In fact, I only execute here in this platform. The research is done on an external platform. So we're looking here at an CFD, which is why do we use CFDs in this case to trade stocks? Because as a retail trader, you're not allowed to short physical stocks. So this is usually, or this is very difficult to find a broker in this case to allow you shorting physical stocks. That's the reason why we're using CFDs in this case. We want to play Intel from the short side. So certainly then we need to play it via CFD. But there's also another reason, which I'd like to make here, why I use an external source, which is, by the way, here. Let me just here, guys, show you. I use TradingView. And why do you use TradingView, respectively, the external source? Because I get data, real trading data, in this case, real volume being traded at the NASDAQ. And also I get to see here the pre-market action, which you can see here in orange. So this is the orange part is what happens in the pre-market. And also here, it's the after hours in blue. You don't see this. If you go here to the trading platform, so you see it's only 3:30 German time in this case, till the end of the trading day. And there's no trading outside of market hours, so pre-market respectively after hours. So that's the first thing. In addition to that, we have true volume here, and which I use then to find levels against which I plan to position myself. And even though the trades, the quotes you will see here within the platform are one-to-one the same as you see here in the real market. So that's definitely something to keep in mind, and why I use this platform here. But let's here coming back to this. So this is my trading platform. This is the mini terminal that's available via the Supreme add-on in this case. So you can download it for free on the website admiralmarkets.com. Yeah, I was about to say /de, but this is an English-speaking webinar, so .com. And then you go via the platforms tab. Let me just here show you the website, admiralmarkets.com. And there you have platforms. Oh, I'm sorry. This is the invest page. Let's go to the trading page in this case. So you have here the platforms, MetaTrader 5. And there you can see here, right on the right, there's the trading tools is the MetaTrader Supreme Edition. So make sure that you download it. Again, it's a great tool, and it increases the trading experience massively. So it's very easy to trade also here based on the order ladder and so on and so forth. But don't dig too deep into this right now. I have here the hourly chart. Where do we stand? Which is very important probably to note, and you can already see it, why this is a level, why this is a level of interest. Here is the level around 28. We've already broken it in the pre-market, trading below that level. We will see this in a few seconds. And so we are trading below that level, which is important because there's further room on the downside right now. In fact, if you closely watch here, and this is on the lower left, lower right in this case, on the daily chart, you can see we're trading in really territory which is about to see a next leg lower in this case. So it's the region around the 2022 yearly lows. And in fact, last time we traded there before, I think was in somewhere 2014. So it's not all-time low territory, but it's at least technically broken once we break below 2450, 25 around. So this is a key level to keep an eye on and to remember, especially when we are short-term trading. We can find support there, but if we're not clearly bouncing, and especially if we break lower below 2450 in this case, this is to some extent then resulting in a technically broken chart, which means nothing more that we have a follow through to expect, or at least this is something I play then. So if I said, let's say I'm playing some kind of a momentum drive based on levels which we have to focus on in a few seconds then on the or based on the pre-market levels, and I have a position where I play the momentum, but I plan to hold apart. I hold it with the intention of this follow through, especially on the downside, probably as an intraday swing into the close of the day. Because if we break that level and won't reclaim that, and especially if the overall market starts to weaken, doesn't look like that right now. So S&P and also NASDAQ quite solid performing right now. But once you get to see that the overall market also turns in and or pulls in this case, and it's not expecting to perform extraordinarily bullish in ahead of the Fed next week, then this could really turn ugly for Intel in this case. So that's the bigger picture in this case. So where we stand, and I have this is a trading platform. I also have here the overall idea of how many shares I plan to trade. Probably I increase that But if I go through my checklist, I have a checklist before the market opens, and this checklist, for example, is like, do we have a fundamental catalyst? Yes, we have one. Let's go through this checklist probably. I haven't prepared it. Also, I have it here on my screen, right in front of me on my other screen. But the problem is this is in German, so that doesn't really make sense in this context. So I can show it to you. So we go through this checklist, but you can work with it because it's in German. But coming back to this checklist. So first of all, we need a fundamental catalyst. We have one. We have one with the earnings, which were released yesterday after markets closed, and they were disgusting, really. Like that was a really bad print. And so now we could say, well, it's semiconductor, so similar to Nvidia or AMD, for example. Look at the charts from these stocks. The SMH sector performed quite well. And quite well, this is also something else to keep in mind. The overall sector comes in quite strongly. So let me just probably show you something here. What I look at is the sector ETF. It's the SMH in this case, and Intel is part of that. And we've run quite a bit here, which now is a question like, okay, what does it mean like we've run quite a bit? Or what does it mean if I use a word like we are extended in the overall sector in this case? So it's not Intel. We are extended. Well, that means that here you can use, for example, something I prefer in this case. It's a Keltner channel. Where you have an EMA 50 in this case here in the mid. I haven't checked this here, but if I check it, then you can see it. There's the EMA 50, and then what I do is I say I want to see 5 ATRs on the upside, respectively 5 ATRs on the downside, in relation to this EMA 50. ATR length in this case is 22. That means that I'm looking at the last 22 trading days, which is 1 month, in fact. So it's not the classic 14, the standard aggregation. And we haven't yet pushed into that level, but we are close about to push into that level. So quite extended from the beginning of the year. And you've also seen that probably in an Nvidia here, also, which is already very extended on the upside. So very strong start. And at the beginning of the month, a week, in fact, I played a long play here, which was technically driven after quite strong close last week. But again, we are quite extended. So semiconductors are not necessarily weak, but potentially about to see a pull in. This is something which could weigh on Intel, especially as a relative weak play, because now coming back to the earnings, let me just check this back here. They were really weak. And it wasn't just that it was a bad outlook due to recession fears or fears in regards to how's the story going between the US and China. For example, we've seen, I think it was in October, if I'm not mistaken, or something, probably even earlier than that, September, there was a law, or there was a provision, probably, that's probably a better way to put it, that the government said, well, certain conductors are not allowed, chips are not allowed to enter China if they can be used for artificial intelligence / especially for military purposes. That was also something weighing on the semiconductor sector in general. So long thing short, what we got to see here yesterday from Intel, that wasn't only driven by that, but it was there's something else going on in the company. So that just not really sure what it is, but this looks really weak. So EPS earnings per share came in below expectations, 10 cents again, 18 cents. Revenue came in below expectations. So that alone is something to be skeptical about, let's say. 14.04 billion against 14.49 billion. But especially the guidance here for the revenue, 10.5 to 11.5 against 13.76 expected. And here the earnings per share, it's not an earnings, it's a loss per share, in fact. So that's why you get the in Germany we call this Klammer, I don't know. So it's that means that it's negative. It's not positive, but they're guiding for the first quarter a loss per share of 15 cents against an earnings per share, which was expected by analysts of 20 cents. And also a massive drop in the gross margin here to 39% against 45.2%. That was something which was certainly also covered here from the media. There's one CNBC Plus article I've seen. There was an analyst, I'm not sure, I think it was from Bernstein or something like that. They were talking about they never seen such a weak report before, whatever they mean by that. Well, at least when it comes to Intel. But long thing short, as a fundamental catalyst, I need to have a check here. And this fundamental catalyst is really bad. So it's weak stock, which is no surprise then to see right here in the pre-market screener that Intel here is dropping more than 9%, nearly 10% compared to the closing price from yesterday, which is, by the way, something I also need to check here. So that means I have a fundamental catalyst. I have a gap which is greater 3 plus minus 3%. Obviously, 10% is greater 3. And we have a massive pre-market volume currently faced here. So 8 million shares already being traded 10 minutes before the spot open happens. So Wall Street open is in 10 minutes from now. We have 8 million shares being traded. How do I measure that? If this is relatively high, relatively low, you could argue the same when looking, for example, here at an Amazon, for example, saying, well, 1 million shares being traded in the pre-market. This is nothing compared to what you get to see on average in the share. In case of Intel, this is completely a different story. In Intel, there's another website I use here, finviz.com. It's all for free, by the way, so you can check out these websites yourself if you want to get further details. You have a great list of fundamentals of the company. In this case, it's INTC, it's Intel. And the average daily trading volume. This is the average daily trading volume for the last 3 months. What was traded in terms of shares on average for the last 3 months per day? 37 million, 38 around, 37.7. And now what you usually want to see is to consider a stock to be hot, that this pre-market volume is minimum 10% of what we get to see average daily trading volume here. Which means right now here we have something like more than 20%, close to 30%, in fact, which makes the stock really super hot. So 3 checks already on my list. Then the next one is that alone is not enough. But I also want to see that it's technically broken. We are getting to see a level which is already broken here. So this blue line, I consider this to be significant in this case. So that was the low of the week before. If we even break below here, below 25, 24.50, 25, we consider it even on a higher time frame to be massively broken, finally broken, let's call it. It's another check, so it's already 4 out of 4, which is quite good. We're getting to see, and this is something we need to wait for. But let's see how the open plays out. I want to see the stock trading below the volume weighted average price. So that's something which you don't find when trading a CFD because it's an over-the-counter product, but you get to see it if we are looking here at the stock. And this line here, you can see there, that's like the moving average. This is the volume weighted average price. So it's it's a line which shows you which price was traded over a certain period, in this case, based on the volume. So it's not just that you say, I sum up the closing prices and then I divide it by a sum of how many closing prices I took and have a moving average here. But in this case, I look at this based on the volume being traded, which means like if we get to see a pop now on the upside, which is not bought from many market participants, and thus the volume is quite low, you don't get to see a sharp push higher here in the VWAP. While once you get to see a drop and there the volume flows in, then you get to see a turnover, like the volume weighted average price following the price in this direction. So that's the idea behind that. Right now we are holding that, but let's see how the open plays out. Let's see how the open plays out. If we drop and hold below, then I have another check, which is 5 out of 5 in this case. And which is also very important for me. Something we haven't yet seen, but something which is very important is I want to see here the drop below pre-market lows yesterday. After us lows here, which is around 27. So I'd like to see a drop below 27. Below, thus also the VWAP. Currently, it falls together. That's another check, 6 out of 6 then in this case. And then there's something I haven't yet seen. So like we are not holding below, respectively in this case, it's S3. It's my third support for the day. But I think we get we get a, how can I say that? It's not a conviction. It's like, it's more like a, I'm missing the word. I'm missing the word. It's not the conviction. Sorry, it's like it's another another check, probably. That's probably a good way to put it in this context. So the next check is the overall sector, the extension I was just making a topic. So if I make this list, I go through this list, I say, well, you know what? So I have here a list of setups. And then I say, well, if I have 8 out of 9 or 9 out of 9, I consider this to be an A+ setup. And thus I'm willing to take 70 to 100% risk of my daily stop in this case. So you have to define it. For this webinar, I define it by 100 euros. So, or I'm sorry, 100 USD in this case. So I don't want to go too big here, just for illustration purposes. But this is how you can understand that. So right now we have 7 checks or 6, 7 checks. That makes it an A setup, which is right now happening more often, but it's not that often happening. NVIDIA, for example, at the beginning of the month was a C setup in this case, why I'm only risks, I think it was 15% of my daily stop in this case. So that being said, I'm saying, well, then I'm taking a risk of 30% of the stop, something like 30 USD if I put this number, let's say, at 100 USD. So that's how I define my position size for such a play. Now we need to see if we, and then the technical levels come into play. So you can see here, obviously, we are holding below 2750, which is, given the pre-market volume, already quite significant, that level. If we open now at 3:30 in 5 minutes from now, get to see a pop and won't make it above that level, but roll over and drop below the volume weighted average price and hold below, I think we should expect further downside, and at least a test of the region around 25. That seems very, very likely in this context. And then I take it from there, in fact. So that's how I do that here, which would mean if I, let's say, get to see the spike into 2750, rolling over, we're dropping below the volume weighted average price, I get in somewhere around, let's say, 2705, probably, shortly above or slightly above 27, risking against the daily highs, and say 40 cents risks. And then you can see going here to the 80 shares could change a little, but if I have 40 cents risk and shorting 80 quantity of 80 in this case, we have 32 USD risk. Means if I have a daily stop of 100 USD, that's 32%, and that falls into my checkup list. So this is how I right now play through the trade, visualize it already, what I want to see. And I have something else I shared over the course of the last and by the way, I now have to do something. I have to do the following. I have to write down within here I have this screen also open here. That's why I need to type this in. I want to have a clear list, a clean list, which I use afterwards, once the trading day is through, to type these numbers into my trading journal and have a clear list of if the trade plays out, if it doesn't play out, that I have something which I can work with afterwards. I'm sorry. That I have something to work with and have a clear list. And then sometimes, I'm sorry, that was not good. One sec, that was wrong. That was wrong. I'm sorry. So it's 9 here. So that I can make sure that I, for example, see afterwards, okay, if this is given and if this is given, well, then probably it's good to risk more on these occasions, while if this is given and this is not given, then I probably should risk less, let's say. So what I usually do here in this context is I fill in the numbers, and I also write a quick game plan. I also include here the news, the ticker symbols, obviously, which I plan to trade. I have also Tesla included here, but let's focus on Intel first. I think that makes more sense than Tesla right now. So if we look at Tesla, let's have a look here. So this is TSLA. Well, that's not short, right? So we are holding below the lows around 164, but the first signs of thinking about a short here that would probably below here 158, probably below 155, and that's not given, and that's why we focus here on Intel right now. And so now let's go through the list. In fact, I wait for the first 5 minutes. I will watch the price action, what will happen. That's why I put it here. But we won't have an opportunity to trade because here liquidity providers wait for the first 5 minutes to play out, and then they offer us quotes. So that's why we have here now 30, but there's no action taking place. So the first 5 minutes go by, and then they open trading for us, and then we have an opportunity to play it. By the way, let's have a look here at the real market action right now. So it's Nasdaq. That means there's no nicey stuff happening right here, as we saw. I think it was on Tuesday or Wednesday, something like that. But this is fully electronic trading. Let's put it that way. And so now let's see what we get to see. So right here, after the first 30 seconds of the trading day, you can see the volume spiking higher massively. So it's 4 million shares being traded already there. We are dropping 27. The thing is now, you probably wonder, well, isn't it? I mean, you formulated a short setup. Now we get to see this break lower. So isn't that frustrating to see that? Well, depends. If I was opening drive trading here in this case, well, then it would be certainly something to be worried about, not to be capable of taking action right here. But in this case, especially with such a hot stock, you want to let the first 5 minutes, 10 minutes sometimes even pass by, wait for a clear indication that your thesis is right, and then take it from there. So there's no need to rush here. There's no need to jump straight into the action, and definitely not something I prefer to do. But I wait for the price action now to play out. So for example, now we saw a slight drop below 27. Now buyers step in, push us higher, but we can clearly see, obviously, we're not taking out this significant region here around the pre-market highs, around 27.40 something, at least not now, which is already an interesting sign. If we hold below that level, that's showing there's no buyer stepping in, even after a gap down of 10%, and there's no real signs of a clear bounce. Still, I prefer to get to see at least a short spike higher, and that then sellers step in, or that the bids are not stepping up. Probably that's a better way to put it. So not buyers stepping in. But as you can see here, really weak, very weak. So we are coming in minus 10%. It's Intel, so it's not a penny stock or something like that, and there's enough liquidity available. So you can see here, it's a shares float of over 4 billion shares being available, and there's no buyer stepping in, at least not now. That's usually not such a positive sign. But again, we have time, we're patient, we wait here for the price action to show us, to guide us into a trade. That's probably a very good way to put it. Let me just guide you here through this. So everything I presented to you right now was already out formulated before. So it's not that I just look at the chart right now and say, okay, this is happening. I mean, now in terms of the price action, sure, market just opened, but everything around my game plan, my thesis, that was something I already wrote down 2 hours earlier and before starting the webinar. So it's not that I jump here into the action and then try to find a way into a trade or something, but it's something I really have to prepare. And we're talking about here day trading. So this is really short-term trading. It's not an investment or something like that. And it's a routine which takes place something like 1 hour, 2 hours a day, probably 1 hour. The better you get at it, and the more often you look at it. This is usually then something probably taking 1 hour of the day, but it's 1 hour I spend looking what's the news, how do I interpret it, how does the market interpret it, which levels to look for, support resistance levels, then what's the gap, what's the ADTV, this is the average daily trading volume, it's 37.43 million shares, 9.4, that's shortly before the open. I fill in this gap here, or this column. We have an ATR, average true range, which already shows how massive this move is. It's 86 cents. And as you can see here, so this is really weak. Let's just see how things play out. But I could also imagine probably, let's see, probably making kind of a open range breakout trade. So like going short if we drop to new intraday lows and having a stop here, then place. That's also something like 90 cents or something. To be honest, I don't like this. I don't like this at least here in the only 5 minutes into the trading day. This is usually something I try to avoid. I probably go the way that I say, see the drop and then clear hold below, wait for the first impulse. So right now there's no clear, I mean, there's obviously no buyer stepping in, but it's also clear that is no aggressive selling taking place. So seeing another stuff, let's say above 27 here, something like, but not really taking out these pre-market lows and then breaking the lows. That was also something which would be more of interest, let's say. But that's a little difficult. So I'm not really sure if it's really like, is it already good to go for a breakout trade? So there have been occasions in place like Tesla or Nvidia in this case, but these are really high beta stocks. This is not the case here in Intel. So it's one of the reasons why I try to be more cautious when it comes here to the breakout trades and the likelihood that such a breakout really plays out. So hypothetically speaking, you usually have a trade right now. I don't take it because I'm not really confident in a breakout really following through. If we get to see a follow through, well, I'm willing to take a slightly worse price, but having a clear level to risk against in this case, because I don't want to see, if we now get to see a flush like 30-40 cents on the downside, break through the pre-market lows, I certainly don't want to see such a flush lower and then Intel going back above 27, which is closely following together here with the volume weighted average price, so the blue line in this case. So the line you can see here, it's not the horizontal line, but this moving average to some extent. Questions? Are there any questions? So I'm talking and talking and talking, but I'm not really sure whether you can follow me. If everything clear, something to keep an eye on, just let me know so I can answer the questions while I follow the price action here in this context. Again, now you can see, by the way, also here, there's some now quotes you get to see. I'm sorry, that's not right. So, and again, this is our trading platform. So right now we don't have, there's no need to rush into a trade or something like that, but we follow here the real market quotation marks. Again, you can see that here. So it's 80, 89, 90. Let me just here, you can see there 88, 90. So it's the same prices you see here. And that's one of the very important aspects in this context. So to make sure that you understand where, in this case, the advantage of trading a CFD comes from, shorting a stock with no problems at all. So you don't need a broker which allows you as a retail trader to short a stock or something like that with a CFD. It's easily possible without having the issue of being allowed or not allowed to trade, to short a physical stock in this context. Also, this is something, well, this is like, it's not a follow through, but it's also not a big bounce happening right here. So this is also something which is not showing real strength. Let's put it that way. So if we get to see now from here a pop back into 27, but we hold below, and this is, by the way, also something I wrote here in my game plan. You can see that there was the pop into the open, which covered 27.50. There's also a second scenario, which with a drive straight below 27. If we drop 27, which we did, and we hold below the volume weighted average price, then I'm short with a target, and this is in fact a trade to hold. So trade to hold in this case, where I clearly trade in direction of the momentum, and also consider part of the position to be hold for probably an intraday swing, so into the close then. Even though right now, especially in the first 30 minutes of the trading day, I clearly focus on momentum plays here. So obviously we are holding below 27. Again, I'm not having a trade, because if I want to trade, then I want to have here a level where a clear sign that we are holding below this volume weighted average price. And if we hold below that level, I'm risking against the intraday highs, which is around 37.30. So I'm getting in with 30-cent risk, which could, by the way, if we hold below that level, let's see if that happens, or if we pop into 27, meaning we're risking 30 cents again, then I have to increase my position size. So then I have to go with not 80 and 40 cents risk, but I'm also capable of trading 100 shares in this case, due to the fact that 30 cents multiplied with 100 is 30 USD, which means if I'm having a daily stop of 100 USD and I'm risking 30%, 35 probably, I'm capable of risking or trading, in this case, 100 shares, since this equals, with a risk of 30 cents, to 1/3 of my daily stop for the setup. I just went through the checklist. So no questions. That's surprising. So if you have any questions, if there's something you want to keep an eye on or have a look at, then just let me know. So now we're coming in, and now let's see if we hold below 27. So obviously this is now getting interesting. I'm not shorting, by the way, the first pop, so that's very important. So I'm shorting if we really hold below that, and I want to see 2-3 minutes holding below that level, especially in the current phase of the market opening. And it's too often that you get to see a first spike, rejection, second try, rejection, and then the third time we just walk through and hold above the volume weighted average price. Again, coming back to the game plan, that's something I clearly make clear here. I said we hold below VWAP, hold below VWAP. So this is my trigger line to some extent. If we go back above that level, in this case it's also above 27, well, at least for now, I'm not interested in a short anymore. And here we need a clear sign that this is so this is the first minute now. So now let's see second, and if we get above that, and now we have to clearly follow the price action and concentrate on what we get to see. How do we react here? Do we get to see buyers stepping in? Look here at the quotes then. Is there any signs of now? Once there is kind of a rejection and we see a flush lower, do we get to see that the bids are taking down while there's a step down in the offers, and then there's another quick pop to 27? Do we get to see that here? Or is it like we take down the bids and the offers continue to hold here at 27? That could be a first sign that, as of now, at least, market participants are not willing to step down, and the trade, the stock, is not yet assured. That's something, or how I would interpret it in this context. So probably also something. This is exactly what I was talking about. This is certainly not what you want to see, and that's why I'm not taking the first pop into the volume weighted average price, especially right now. So this is now interesting. So because the question is, now we pop above that level, and now you would say, okay, now short is done, then we are done for the day. Not necessarily, because the minute here, the candle hasn't yet closed. What does this mean? Well, just imagine we see this pop higher, but there's no follow through. Now, buyers are not stepping up here in this context. So right now they're holding close to 27, but you can see we are rejecting already. This is 15 cents. If we don't make it above 27 now, and we are holding below that level, that's something you can also define as a stuff candle in this case, in fact. I think now we have our short. Let's just see if we get to see another pop higher. And by the way, I'm also risking against 37. Just take this out here. So I just have to watch here on my screen. Okay, so I'm shorting now. We're holding below that level, so you can see here. So there's this stuff higher, and we're rejecting right below that. So this is a clear sign, and I'm risking. In fact, I'm not risking against the intraday highs, but what I do is I risk against this. Call it the stuff candle, because you don't want to see this. I'm taking out here 27. Let me just check this out here. That's 19. So I'm risking against this high now. And what I want to see now is, in fact, certainly I want to see Intel holding below 27. And in fact, I also want to see now sellers stepping in. So momentum on the downside. So this is something which is like, let's go. Okay, so now I want to see momentum on the downside. So this is definitely something you don't want to see in this context. So this is definitely something which is not really optimal, let's say. Even though I'm willing to risk against the highs here, because overall price action seems to be kind of choppy, minimally choppy. So let's see. That's it. So let's hope that the trade plays out. Doesn't look like that as of now, at least. So this is not really holding below 27. So probably I'm out in a bit, because there's no further momentum on the downside. Even though if we drop below, if the trade holds here, then I'm probably good to go for also entering more if we break to new intraday lows then below 26.50. So that's it. I'll probably, well, there we go. So now I'm out. And I think this is also a clear sign in this context. It's a clear sign that as of now, well, the thesis is not valid anymore. At least it's not valid anymore. It's probably a little too much, but this looks like more kind of a test, at least, let's say, of the region around 27.30. So if you get to see such a stuff and then reject it, this is usually a sign for the short, for a short play. If this is now taken out, then at least short term, very short term, the momentum on the downside is not given anymore. You can see that here. So risking against this level, this is 10-15 cents better than the exit which would have occurred right now with the push to new intraday highs. Let's just see how things play out, because that was a significant level in the pre-market. If we hold below that level, then we're probably good for another short, even though, again, you want to see a drop below the volume weighted average price in this context. So they're very important in this case, so that we drop, in this case, then 27 again. That's it. So that's it from my end. So I hope you enjoyed the webinar, and all the best. Happy trading. Good luck with the trading day. Let's see how things play out in the next minutes, hours, and the last hours of the trading week. Have a nice weekend. Enjoy yourself. Talk to you again next week. And that's it from my end. So all the best. See you.